You're scrolling through YouTube or Instagram or TikTok, and there he is, the guy with the perfect hair, the expensive watch, the rented Airbnb posing as his office. He's standing in front of a Lamborghini he definitely does not own. And he's telling you about the next big thing, the stock that's about to explode, the crypto that's going to 100x, the real estate strategy that will make you a millionaire by Friday. He's got charts, he's got arrows, he's got a countdown timer. Only 24 hours left to get in on this. You feel it, the FOMO, the excitement, the belief that maybe, just maybe, this is your ticket. You watch the video, you click the link in the description, you sign up for the newsletter, you buy the course, you buy the stock. And then nothing happens, the stock goes down, the crypto crashes. The guru posts another video about the next big thing, and you're left holding the bag. You think to yourself, maybe I just got unlucky, maybe I didn't follow the strategy right, maybe next time will be different. Here's the thing, it's not bad luck. It's not you, it's the business model. The guru doesn't make money from the stocks he tells you to buy. He makes money from you, from your clicks, from your attention, from your credit card. You are not his student, you are his product. Welcome to the Guru Industrial Complex ***. It's a multi-billion-dollar machine designed to separate you from your money by pretending to show you how to make money. And today, I'm going to show you exactly how it works. Hi, what's up? I spend way too much time thinking about the economics of financial influence. Why the people telling you how to get rich are almost always getting rich from you, not from their own advice. If you're someone who's ever bought a course, joined a Discord, or followed a stock tip from an internet stranger, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Most people think investing is about having a lot of money. The truth, it's about what you keep, and the first thing you need to keep is your money away from the gurus. I'm building a community at the Frugal Investor * newsletter where we strip away the hype and focus on high-impact, low-cost wealth building. Get your copy, the 15-day blueprint for wealth and financial autonomy, and join a group of like-minded investors who prioritize long-term gains over short-term trends. Link is in the description. Let's start with the most important question. How do financial influencers actually make money? If you ask them, they'll say they make money from trading. They'll show you screenshots of massive gains. They'll flash their watches and their cars. They'll imply that their wealth comes from their investing genius. But here's the truth. According to a report by the Securities and Exchange Commission, the vast majority of financial influencers have no verifiable track record of successful investing. Many have never filed a tax return showing significant trading income. Some have been fined or prosecuted for fraud. So how do they actually make money? Let me break it down. Revenue Stream 1, Affiliate Marketing. This is the biggest one. The guru promotes a broker, a trading platform, a crypto exchange, or a software tool. You sign up using their link. The company pays them a commission. Sometimes it's a flat fee per sign-up. Sometimes it's a percentage of your trading fees. According to industry sources, affiliate commissions for trading platforms can range from $50 to $500 per user. Some crypto exchanges pay up to 50% of the trading fees you generate, for life. That means every time you trade, the guru gets paid. They want you to trade a lot. They want you to be active. They don't want you to buy and hold. They want you to churn. Revenue Stream 2, Course Sales. This is the classic. The guru sells a course on how to trade, how to invest, how to get rich. Prices range from $97 to $10,000. The courses are often filled with basic information you could get for free on Google, but they're packaged with fancy graphics and secrets that sound exclusive. According to a study by the FTC, many of these courses have refund rates over 50%. People buy, realize it's garbage, and ask for their money back. But the guru keeps the ones who don't ask. Revenue Stream 3, Discord and Telegram groups. This is the modern version. Pay a monthly fee, say $50 to $500, to join a private community where the guru shares real-time alerts. You get access to their trades. You get access to their wisdom. You get the feeling of being an insider. But here's the thing. These groups are often filled with bots and shills. The guru might be in there, but they're not actually trading. They're just collecting your monthly fees. According to a report by CNBC, some of these groups have tens of thousands of members. At $100 a month, that's millions of dollars in revenue, from people paying for tips that are often worthless. Revenue Stream 4, Pump and Dump Schemes. This is the dark side, the one that's actually illegal but still happens all the time. The guru buys a low-priced stock or crypto coin, then they tell their followers to buy it. The price goes up. The guru sells into the buying pressure. The price crashes. The followers are left holding worthless bags. According to the SEC, this is a classic pump and dump scheme. It's securities fraud, and it's surprisingly common in the crypto and penny stock worlds. In 2022, the SEC charged 8 social media influencers with a $100 million stock manipulation scheme. They used Twitter and Discord to pump stocks, then sold when their followers bought. They made millions. Their followers lost everything. Revenue Stream 5, Sponsorships and Brand Deals. Once a guru gets big enough, companies pay them to promote products. VPNs, brokerages, crypto wallets, credit cards. The guru gets paid a flat fee, sometimes tens of thousands of dollars per video, to tell you to use a product. The guru doesn't have to believe in the product. They don't have to use it themselves. They just have to read the script. Revenue Stream 6, the mastermind or mentorship. This is the high-end play. The guru offers a limited spots mentorship program for $5,000, $10,000, even $50,000. You get direct access to the guru. You get personal coaching. You get to be in their inner circle. In reality, you're paying for a few Zoom calls with a glorified salesperson. The mentorship is often just more of the same generic advice, repackaged as exclusive. Let's look at some numbers, because the math is staggering. According to a report by Business Insider, the top 10 financial influencers on YouTube earn an estimated $50 million to $100 million per year combined. That's from ads, sponsorships, courses, and affiliate deals. One popular guru, Andrei Jikh, reportedly earns over $3 million per year from his YouTube channel alone. Graham Stephan earns similar amounts. These aren't traders. They're content creators. Now, compare that to what they'd earn if they actually just invested in the S&P 500. If you had $10 million invested, you'd earn maybe $500,000 to $800,000 per year in dividends and growth. That's nothing compared to the millions they make from their audience. The math is clear. They don't make money from investing. They make money from you. Now let's talk about the brain. Why do we fall for this? Why do smart, rational people give money to internet strangers? There's a concept in psychology called authority bias. We're wired to trust people who appear to be experts. If someone has a big audience, nice clothes, and confident delivery, we assume they know what they're talking about. Gurus exploit this. They dress the part. They rent the cars, they stage the photos, they create the illusion of success, and we believe it. There's also social proof. If thousands of other people are following this guru, they must be legit, right? Wrong. Those thousands could be bots. They could be paid commenters. They could be people just as lost as you. And there's scarcity. Only 10 spots left. Offer ends at midnight. This triggers our fear of missing out. We act quickly without thinking. The guru industrial complex is built on these psychological triggers. It's not about giving good advice. It's about getting you to act. Let me tell you a story about two followers. We'll call them Jake and Ryan. Jake follows the gurus. He's in the discords. He's bought the courses. He's subscribed to the newsletters. He gets the alerts. He trades based on what they say. Some trades win, most lose. But Jake keeps going because the gurus always have a new reason why this time will be different. Jake has lost $20,000 in 2 years. He spent another $5,000 on courses and memberships. He's stressed, anxious, and no closer to wealth. Ryan does something different. Ryan follows one simple rule. If someone is trying to sell you something, their advice is suspect. Ryan invests in low-cost index funds. He reads books by actual experts with decades of experience. He ignores the noise. Ryan has gained $30,000 in the same 2 years. He's calm. He's on track. He's building wealth. Same time period, different approaches, different outcomes. The difference wasn't intelligence. It wasn't access to information. It was understanding who actually makes money from the advice. Let's look at the data on guru performance. Because if their advice was actually good, you'd be able to measure it. According to a study by CXO Advisory, which tracked the performance of 68 financial gurus over 15 years, the average guru's accuracy was about 47%. That's worse than a coin flip. Random guessing would have beaten most of them. Another study by the Journal of Financial Planning found that stock picks recommended by popular media pundits underperformed the market by an average of 2–3% per year. And here's the kicker. When gurus are wrong, they don't apologize, they don't admit it. They just move on to the next prediction. They have no accountability. Imagine if your doctor had a 47% success rate. You'd find a new doctor. But with gurus, we keep coming back. Now you might be thinking, but there are some financial influencers who are actually wealthy. What about them? Yes, there are. Some people who give financial advice are genuinely successful investors. But here's the thing. They didn't get wealthy from selling you advice. They got wealthy from investing, and they don't need your money. Warren Buffett gives advice. He's worth over $100 billion. He doesn't sell courses. He doesn't have a Discord. He writes letters to shareholders for free. Jack Bogle, the founder of Vanguard, gave advice. He didn't sell anything. He just told people to buy index funds and hold. Ray Dalio gives advice. He's worth billions. He wrote a book. You can buy it for $20. That's it. The real gurus don't need your monthly subscription. They don't need your course fees. They don't need your affiliate clicks. They're already rich. The ones who need your money, they're not rich. They're just playing one on TV. Okay, so you're convinced. You want to stop being the product. How do you actually do it? Step 1, the source check. Before you take advice from anyone, ask, how does this person make money? If the answer is from selling advice, be skeptical. If the answer is from actual investing, pay attention. Look for conflicts of interest. Are they promoting a broker they're affiliated with? Are they selling a course? Are they pushing a coin they own? If yes, their advice is suspect. Step 2, the track record test. Ask for a verifiable track record, not screenshots, not testimonials, actual audited returns. If they can't provide it, assume it doesn't exist. According to the SEC, any investment advisor who claims to have a track record must be able to back it up. Most gurus can't. Step 3, the free versus paid rule. If the information is valuable, it will be available for free somewhere. The basics of investing, buy index funds, hold for the long term, diversify, are free. The secrets gurus sell are usually just the basics repackaged. Before you pay for anything, Google it. You'll almost always find the same information for free. Step 4, the time horizon test. Ask, does this advice benefit me in the long term or just in the moment? If it's about quick gains, quick trades, quick riches, it's probably a trap. Real wealth takes time. Step 5, the who wins question. For any transaction, ask, if I do this, who wins? If the answer is the guru, don't do it. Here's the final piece, the one that might actually change your perspective. The best financial advisor you'll ever have is you, not because you're a genius, because you have your own best interests at heart. When you learn the basics, when you understand the math, when you ignore the noise, you become your own guru. And that guru doesn't charge fees, doesn't sell courses, doesn't have conflicts of interest. The frugal investor isn't about following me. It's about giving you the tools to follow yourself, to trust the boring math, to ignore the exciting stories, to build wealth on your own terms. The final shift is identity. You have to stop thinking of yourself as a follower and start thinking of yourself as an owner. Followers look for someone to tell them what to do. Owners figure it out themselves. Followers pay for advice. Owners pay for assets. Followers get excited about the next big thing. Owners get excited about steady growth. The guru industrial complex depends on followers. It can't survive owners, so become an owner. Look, I'm not saying all financial influencers are bad. There are good ones out there. People who genuinely want to help. People who don't have conflicts of interest. People who give away valuable information for free. But they're the exception. The rule is, if someone is trying to sell you something, their advice is suspect. The next time you see a guru with a Lamborghini and a countdown timer, remember, that Lamborghini was probably rented. That countdown timer is a sales tactic, and the only person getting rich is the guru. You can do better. You can ignore the noise. You can follow the boring math. You can build real wealth without paying for secrets that aren't secret. I really hope this video brought you some value today. If it did, comment more down below. I'm reading through those to decide what topics to cover next, so definitely let me know if you want more of this. Stop following gurus. Start following math. And I'll see you in the next one.